The following is a pre-recorded show. Welcome to Winning in Retirement with your host, Brian Akers, certified financial planner professional and founder of Akers Financial Group. Now, helping you win in your retirement, here's Brian Akers.
Welcome to Winning in Retirement. I'm your host, Brian Akers from Akers Financial Group. I'm the president and founder of Akers Financial Group. Here with me today is Jeff Akers from Akers Financial Group, a certified financial planner practitioner. Good morning, Jeff.
Good morning, Brian.
How are you doing this week?
I'm doing great.
There's a lot going on, and this show, we have a lot to cover. Our show is going to be called The Election and Medicare Season. But what I need to do, Jeff, is not let you talk.
Well, I am looking forward to hearing what Mark has to say, so that's okay.
All right, so what we're going to do is have a special guest as we start the show on the stock market after the election, just to hear what is going on with the stock market and try to get some information from Mark Diorio from Brookstone Capital Management. He is the Chief Investment Officer of Brookstone Capital Management, and we welcome Mark Diorio to our show for the first quarter here. Hey, Mark, how are you doing?
I'm great. How are you guys doing? Thanks for having me.
It's great to have you on the show to give us an update on the markets post-election. And I wanted to give you some time to sort of tell us how does this results of the market of the election affect the market?
Well, I think we've had a really interesting move, especially the day after the election, and a very sharp move in the markets in general. We've been talking about that it's the election cycle and the presidential cycle that matters a little more than just the election itself. In other words, in the election year, it's generally an uptrending market with a couple of sell-offs, maybe a little things spook the market in the spring and then in the fall. And then after the election, the market tends to rally and then continue that rally into the first year of the presidential cycle. And so I think that move that we saw right after the election really reinforces those trends, that the market kind of takes that issue off the table and then continues. So we're staying aligned with the historic trends of how the markets have acted and using the election year cycle and the presidential cycle as part of our guide.
That sounds like this is a normal post-election response, is what you're saying, that we need to expect with the results from this week.
It is, and I think there was some concern in the market that, well, maybe you don't know right away, it'll take some time, and that didn't happen. So it was very clean and kind of a clean break, and so the market could kind of lift off and go into those trends essentially immediately following the election.
Yeah, so I remember it was 8 years ago or so, there was sort of the Trump trades. There's the idea of where he might go with policy and things like that. Is that something that we should concern ourselves with, or should we be more growth-oriented, value-oriented? What's your general thought on investing with what's coming up?
Well, going with that theme of the presidential election cycles, what you have post-election, and kind of let's say the 6 months prior to the election, you have defensive industries start to do pretty well or outperform those growth or cyclical sectors. So consumer staples, healthcare, utilities, telecom perform broadly better. And we did see that for the last 6 months or so. But around election day, then trends change and the cyclical sectors, energy, industrials, consumer discretionary, tech, financials, start to outperform for about a year following. So yes, we'd be aligned with that. And that's what we saw right away, where the cyclical or growth sectors outperformed considerably the defensive sectors the day following the election. And we think that trend is poised to continue throughout and well into the first year of the presidential cycle into 2025. The other point is that we saw small and mid caps rally as well. Historically, the best time for outperformance for small and mid cap is actually right after the election and about a year into that first year of the presidential cycle. So again, staying aligned with those historical tendencies, and it's really providing a lot of insight into this market.
Now, how does this affect interest rates and the possibility of rates reducing over the next year?
So the market does expect continued reductions in interest rates by the Fed, and I think that is set to continue. They'll, of course, monitor inflation, unemployment. Those are really the two key issues for the Fed to monitor. If inflation kind of picks up much quicker than anticipate, maybe they'll go very slowly on it or pause their rate reduction campaign. But as long as inflation stays relatively subdued, I think they're on the path to start to slowly reduce interest rates into 2025. So that is still actually supportive of equities and stock prices moving forward as well. So another reason, at least, to stay aligned with those historical trends.
Now, the interest rates are truly at the result of the Federal Reserve, which is separate from any president or Congress. Is that correct?
Correct. So presidents are aware of what the Fed is doing, and of course they all want lower interest rates to make sure that they don't raise interest rates too high and it kind of chokes off growth and you have a recession. So the Fed is independent of the executive office, but they are aware that they're responsible for the economy overall, and their two mandates by Congress is who they report to. Or at least update, I should say, as opposed to report. They update is to maintain stable prices. So you have to have policies that maintain stable prices, which means, as a rule of thumb, an inflation rate of about 2%. And of course, we were higher than that, and that was the reason that they increased interest rates to slow down that inflation factor. But they've been able to, inflation has come down, so now they're in that path of reducing interest rates. And the other part, the second part of their mandate is to maintain a low unemployment rate or full employment, and that, as a rule of thumb, is considered a 5% unemployment rate or lower, and so we are below that as well. So that'll be an area that we continue to watch. We have seen an uptick in unemployment, but it's still well below that 5% level.
So when you see post-election results and then you think about growth, I think about inflation. Is that something that's still a concern?
I think they're always trying to balance that, and that's why when we look at the presidential cycle, the reason that it's important in that 4-year cycle and why we rely on it a little bit is because you have fiscal and monetary impetus, the ebb and flow of the increase and decrease of those two factors into the marketplace really aligns with the 4-year presidential cycle anymore. So it's a way to interpret the business cycle along with that influence in fiscal and monetary policy. So you can think of it as stimulus coming into the market, and then if the market gets overheated, they're going to pull back on either monetary or physical or both stimulus effects. And that we'd be looking for maybe into that second year of the presidential cycle. So maybe if the market continues moving forward, maybe you get to an overheating stage some point next year. Valuations are elevated, and then we maybe look for a little bit more meaningful type of correction at that time.
Yeah, does that mean that the U.S. dollar is going? I mean, the markets are sort of telling us the U.S. dollar is actually improving in the last couple of days after the election. Is that meaning that the currency risk or the currency idea of it going further down is off the table, or what's your thoughts?
And it was a very stark move where the dollar rallied against foreign currencies. I think that's a reaction. That was a very big move. Currencies don't move that much in that short time period typically. So I think you'll see a cooling off of that kind of immediate knee-jerk reaction. And depending on how quickly the Federal Reserve reduces interest rates, that'll kind of dictate the relative value of the dollar. And then when we're saying it appreciates or depreciates, that's relative to other currencies, the euro, the yen,
sure,
and so forth. But what we have seen, I would say, is that the dollar has maintained its status in high use, where other currencies have actually fallen off their use in foreign exchange. So the euro, the yen, they've really declined in terms of pair trading, and the dollar has maintained a big dominance in that factor. So, so the dollar's not going away anytime soon. The relative value may ebb and flow, but I wouldn't expect that big a movement going forward.
All right. So mainly the post-election is going to be I guess currently we see a reaction to the upside, but it's going to be a sort of a wait and see, almost like when you're talking about the cyclical nature of after the election, that it's pretty normal to have a pretty positive first year. And so that this sort of moves in line to that. And so that means that for stock investors, they need to stick with things. Market timing really doesn't work. My last question for you would be, is this a diversification that's going to work now, or is this sort of a mega cap type market we're going to head into? What's your thoughts?
Yeah, this is a great question because a lot of news outlets and so forth focus on the large cap tech stocks. They get all the news, the headlines, and they've done pretty well. What we saw starting in the third quarter is the rally started to broaden out. So this is just at its early stages of broadening out, incorporating more and more stocks, and that's a very healthy sign for the overall market. So I would expect the rest of the market and going into small and mid-cap stocks to perform relatively better than those large cap stocks in this phase of the cycle.
Absolutely. I know, Mark, you're off to your next media appearance, so I really appreciate your time. Also, what you do for us at Akers Financial Group, being the portfolio manager with a lot of our third-party money that we have managed from Brookstone Capital Management. So thank you for coming on our show today. I appreciate that, Mark.
It was a pleasure. Thanks, guys.
It's always good to have you, Mark. Thanks very much.
Thank you.
That'll be fun. Thank you very much. Well, that was Mark Diorio, the Chief Investment Officer from Brookstone Capital Management. That's who we use as part of our third-party money management. And so when we talk about financial planning, we talk about money management. This is all basically implementing what people need to do in their finances. So today's show, we wanted to bring up, what does election do to the market? And what happens is we get responses, and the idea is this pretty much stays the way we would recommend, is that with the market's going to be pretty good.
Right.
We recommend that no matter what happened to the election, so it's not a big change when it comes to that.
We do our best to plan for all seasons.
Absolutely. So Akers Financial Group, we're local, we're independent. We don't report to a big company on Wall Street. We report to you. We have offices in Lutherville, Forest Hill, clients all around the Mid-Atlantic region, all around the country, even a few around the world. It's so easy to begin winning in retirement. Just give us a call and schedule your meeting with one of our team of advisors. Call 833-WIN-RETIRE. That's 833-WIN-RETIRE. We'll give you a call on Monday to schedule your free in-person meeting. Go to AkersFinancialGroup.com or call us at 833-946-7384 to start planning for your retirement now. The election has been decided. How does this affect financial planning? We'll explain when we get back in a moment.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers from Akers Financial Group. Here with me today is Jeff Akers. We're both certified financial planner practitioners from Akers Financial Group. Welcome you to our radio podcast, Winning in Retirement. Today's show is post-election show, and we're talking about the election, and then we're going to talk about the Medicare season. So second quarter is about the election's effect on financial planning and just some thoughts. The idea is that we have thoughts. I'm not sure if it's going to be any definitive answers except for some things that just came out this week. So I thought we'd start with what we know. Now, there's some charts and some information for 2025. And so, Jeff, we want to go over the changes for 2025.
Okay. So in 2025, things are going to increase. Some things are going to increase. Mostly if you're contributing to a 401k, then the contribution limit has been $23,000 for the year. That's the most you could put into your 401k, unless you were over the age of 50. Then you had a catch-up contribution as well. Well, that $23,000 is going up to $23,500. So there's a whole $500 more that you could put into your 401k next year in 2025.
So the key thing to hear is this. If you want to maximize your 401k contribution, you can, by $500, put more in. You need to change your payroll.
Right.
And generally, we recommend that you spread your withholding throughout the whole year so that you get a matched calculation done properly.
Right. I was actually talking to someone the other day that on their job, once you maximize what you're contributing to the 401k and they stop those contributions, the company match was done quarterly. And if you don't contribute in the fourth quarter, then you don't get any match for the fourth quarter. So we had to slow down her contributions to make sure that she was going to have money contributed there at the end too.
I would assume that with your company 401k plan that the match is based on whatever comes out of payroll. It's an automatic system.
You would assume.
Nothing come out of your pay, no match.
Right.
So spread it out evenly. If your income's geared on commission or anything else, watch your contributions. Yes, maximizing is our answer.
Right.
If you want to maximize retirement, maximize your contributions.
Yep.
And so 23,000 is a 24 limit. So if at the end of the year here, hey, try to get that maximized if you can.
Right.
Next year it'll be 500 more for everyone under 50.
Yep.
Now, over 50, what happens? What's this catch-up thing?
The catch-up contribution is $7,500, and that's not changing.
That's been around for a while.
Yeah.
So as you get older, and 50, you're not old at 50. You might feel like it, but you're not. But you can save more money.
Right. You can save some more money. So your total contribution limit to the 401k is $31,000 this year if you're over 50. There is, however, this little window of time, and this is brand new, if you're going to be 60, 61, 62, 63, where your catch-up contribution is actually $11,250.
Yeah, slow down here, Jeffrey. So there is a new rule in effect for 2025.
That's right.
For next year. And the reason to bring it up here is the fact that it just came out.
It's brand new. Next year is the first year.
And so you can change your payroll here at the start January if you're turning the age 60, 61, 62, 63.
Right.
Is this still called the catch-up rule?
It's still called a catch-up.
It's not called the hurry-up rule?
No, I don't think they called it anything special, which just makes it more confusing.
But it's only for 60, 61, 62, 63.
So for 4 years. Yes.
And that means your birthday's in that year.
Right.
So if you're turning 64 during the year,
you're out of luck.
You're out of luck.
Back to $7,500.
Oh, my. Okay. So just to confuse, you're allowed to put more away.
Right.
The thing is check with your plan, find out if you can do it. This is for only this special little gap of ages.
Right. And it's because it's so new, you have to check with your plan and make sure that you can do it because it is contingent on plan rules too.
What's your assumption on plans? Do you think they have that?
Well, I don't want to say anything bad. Yeah. So there's the law. And then there's the plans.
Yeah.
And so the law says this is what you're allowed to do. And then the plan says this is what we say you're allowed to do.
All right. So the new thing to hear is this. This is nothing to do with the election. It was already part of the rules of the 2020 Secure Act 2.0, I think it was called. Yeah. That one allowed in 2025 this special catch-up provision.
Right.
There's no new nickname for it. I call it the hurry up, but the idea is you can put more money away. I like to Roth that money. You can Roth it. Roth means you can pay tax now on it.
Yep.
And that's really the next question on this post-election is what's changing with this post-election? Now that we know that Republicans won House, maybe the Senate and the president, the likelihood of the 2017 the Tax Cut and Jobs Act for this extension is possible now.
The potential exists. Right.
And that means that today's lower brackets with the higher standard deduction is the rule currently. It's not permanent.
Right.
It's supposed to end at the end of next year.
Right.
And so this election was a big deal on that tax law.
So under current law, at the end of next year, the tax law is going to revert to what it was in 2017. That is the current law. So we can't say that in 2026 we know what's going to happen. Under current law, it's going to change.
So how does that affect financial planning? The answer is this. In 2024, tax rates we know they're good. We recommend examining your money, your income, your year-to-date income. See if you can do any Roth conversions and see if it fits. We got to watch out for Irma. Irma's not a hurricane. Irma's an actual calculation on your Medicare premium. That affects people 60, 63 and over. You got to know what that is. Call our offices so we can explain it to you.
Right.
Irma is just another factor on income limitations, so you got to watch Roth conversions above that.
Right. So we'll get to more of that maybe in the Medicare part, but
we have a lot to cover today, Jeffrey. So don't make those promises like that.
Well, let's go back to IRAs real quick. We talked about the contribution limits for the 401ks. IRA contribution limits, no change. So
I was still stuck on the sunsetting tax law.
Well,
I get so excited about the sunsetting tax law because I believe we're in a great low rate. Now, there might be this perception rates might lower even more in the future. We'll see. I don't like the plan and what could happen or might happen. I like knowing what we know.
We plan on what is.
Imagine you have a game, and that game, these are the rules right now. We know them. And guess what? They might change the rules. Mm-hmm. Effectively, right now, I'm okay with the tax rates. And if I can pay tax now, never again,
right?
That's called Rothifying. I'm not sure if that's an official word yet. Rothifying. I like it. Examine, see if it fits in your situation.
Right.
Back to Jeffrey. So the update that came out about all the other numbers, there was really no other number increasing, but we do know that Social Security, the Social Security people drawing will get a pay increase.
Right. So Social Security has announced that that's going up 2.5%. So if you're collecting Social Security now, you'll get a 2.5% bump to your gross number starting January.
In January. So that's a Social Security wage based on their projection, and that's what they're going to be doing.
It's their cost of living adjustment.
Now, what happens is that they take the inflation numbers. When they go down, then these numbers go down.
Right.
It also affects lots of IRS codes and limits. And there's a whole chart to this, and that's something that I think what we might do is post that on our webpage at akersfinancialgroup.com under documents. We'll have that little chart up there.
The chart showing every year's increase, or
no, just what's coming for 2025.
Oh, okay.
Yeah. I know it's confusing because we never know, but the key thing is akersfinancialgroup.com. You got to check it out. You can go to our radio podcast section, but you can also go to documents, and there we can put up information, and we put information there. We'll put up the 2025 contribution limits list and a little information for people.
Yeah, there's a lot of information there, so go there and explore, see what's coming up. See what kinds of things you can learn. And then as you're listening to the show, you can also, go from the show to the document section and just kind of reinforce what you've heard on the shows. Because sometimes I'll listen to something, I'll say, did they say this? And then I go and I look it up and it's like, hey, yeah, okay. So that's something new that I know now to do for the coming year.
Yeah, there's so many moving parts. And so any type of change that occurs, especially in an election, you got to wait and see what actually becomes law. I don't like to listen to all the possibility proposals and options.
You can't plan on speculation.
But they like to talk about it.
Right.
And I don't like that being in my head when I come down to making practical decisions in clients' cases. But in this case, financial planning is needed. You need to do financial planning. I believe it's been the most important thing to do for many, many years. It's become the cool thing recently. So cool they call it being a fiduciary, which I like that word.
Yeah. Fiduciary, you got to do what's in your client's best interest.
Yeah, so you got to understand the rules, the laws, and apply it to them. I've never known any other way of doing this, unless you're product driven as an advisor, which would be a real shame. One of the things I saw this week, I was reading after the election about markets after a changeover and how the markets actually do better if the Congress was split versus having Congress all be one party.
Kind of that divided government thing.
Yeah, and I think the concept is that a divided government means things stay the same. It's more stable. Right. You don't have to worry about whatever might come up. Yeah,
the word you hear on the news is gridlock.
And gridlock means American stays the same, which the market actually is okay with that.
Right. The market likes that.
I mean, this week the market jumped up, but that's more anticipation of what possibly could happen. There's no real change.
Right. It hasn't happened yet.
No, not at all, except for elections finished. And then, of course, they're counting certain things for next week or two.
They think they have an idea of what's coming.
Yeah, and so in January, we'll start the process of examining and seeing what the rules of the games are and rules that we need to apply to financial planning. Right. So how an election affects financial planning. The key thing you need to understand is you are unique. You need to do planning applied to you. And that's what this show, the radio show, and what we do at Akers Financial Group is all about that. So when Jeff and I are talking about the effects of financial planning, we just barely touched it. Barely touched the concepts. We're just giving a little bit of advice of look at your payroll, make sure you max out for next year, start it evenly, divide it by 12 or 24 or 26, whatever amount of payrolls that you have that they actually withhold on, spread it out.
And just remember, your plan has to be flexible. So as things change, the plan can change to adapt to it.
Yeah, and you have to look at it.
Yep.
And so like end of the year, I always like every client to check that they maxed out for the year. That's a good thing.
Right.
Now, this is planning. That's what it all is. And this planning leads to winning in retirement. What we do is financial planning. And Jeff and I love what we do because we help people reach their goals. Winning in retirement is defined by that client, by that person. They tell us what winning looks like, and it changes even in their retirement years. Mm-hmm. They go, I like to do this, I'm going to do this, I'm going to do that. And it's a combination of that. Sometimes it's a lot of talk and all indecisive and not sure what I'm going to do, and they don't do anything. Sometimes the client just runs and goes. It depends on how you make your decisions. So at Akers Financial Group, we invite you to sit down with one of our team of advisors to talk about your unique situation. That's a free meeting where you sit down with one of our advisors. You can give us a call at 833-WIN-RETIRE and schedule this free in-person meeting with one of our team of advisors. That's 833-WIN-RETIRE, 833-946-7384, or you can visit our website at akersfinancialgroup.com. If your mailbox is full of Medicare advertisements, this next segment's for you. It's Medicare season. We'll return in a moment.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers from Akers Financial Group. Halfway through our show, it's halftime. I'm Brian Akers. I'm Certified Financial Planner. And Jeff Akers, Vice President, Certified Financial Planner Practitioner from Akers Financial Group. And we're covering your specialty here at Akers Financial Group here in the second half of our show.
Oh, hooray.
It's the Medicare season. Can you sing that for me?
Oh, you don't want to hear
the
me
Medicare
sing.
season?
I want people to keep listening.
All right, so Medicare season in the fall is where you get lots of mail, lots of Medicare mail.
Yes, you do.
So explain to me why. Why does this happen in the fall?
All right, so between October 15th and December 7th is sort of Medicare open enrollment. And all
like hunting season.
Well, yeah, the hunting season is broken up into pieces, but yeah. So the stuff that you see on TV, that's generally going to be advertisements for Medicare Advantage. That's a special kind of Medicare. But during open enrollment, if you've got a Part D prescription drug plan, that's your opportunity to make a change to it during that window of time. If you have Medicare Advantage, that's your opportunity to shop for a different plan during that time. But that's just for Medicare Advantage.
All right, so I got a timeout here.
Okay, yeah.
Medicare is open enrollment for those turning 65 or those over 65.
Open enrollment time is for over 65.
Over 65.
If you're already on Medicare is the better way, I think, to.
All right, so if you're disabled and on Medicare or over 65.
Right.
If you're 65, Medicare season would be when you turn 65.
Right.
Okay.
You can first just normal, everything's good, you're not disabled or anything. Then at 65 is when you're eligible to sign up for Medicare and be covered by Medicare.
You're eligible, but you have to.
You have to sign up for Medicare. There is an exception if you work at an employer with more than 20 employees and you're covered by their health plan. That health plan is primary and you don't have to sign up for Medicare right away.
All right. So that comment you made is something that I think is very important. You said if you work for someone with more than 20 employees, you then can keep that coverage if that's available through that group.
Right.
If you work for someone less than 20 employees, what happens? So this would be an answer for small businesses, for those turning 65 in a small business. This is the answer.
Right. So if you're working for an employer with fewer than 20 employees, you have to sign up for Medicare Part A and Part B and pay that Part B premium because Medicare is the primary payor in that situation.
Payor or payor?
The one that does the paying of bills.
Yeah. So, all right. So Medicare comes primary. So what happens to your group plan when you're 65 in a small business?
So your group plan could be the supplement. That's kind of your backup to Medicare. Medicare has some gaps in it, and so the group plan could be the supplement to that. You need to check with the group plan itself and make sure that when you turn 65, they don't just say, we're dropping you, you don't have coverage anymore,
right?
Just to make sure that's not the case. But if they don't, then you could use that as your supplement.
All right, so you have a supplement, or you can go out and buy your own supplement.
Right.
And sometimes that'd be cheaper than keeping the group.
That's true. It could be cheaper, and the coverage on the supplement could be better than what you would have through the group plan as well.
So I'm a basketball coach, and I love strategies. I love coaching things through. I believe there's a fundamental thing we need to know with Medicare. Fundamentals, like basketball, how to dribble, how to shoot.
Yeah.
There's a fundamentals. And the fundamental is this. When you're 65 and you choose a Medicare plan, that Medicare plan is a very important level that you set for the rest of your life. Can you explain the basics of what that means? And really, we're going to talk about why it's important, why I think it's a fundamental important thing to understand.
Right. So I need to back up just a second. There's Medicare Part A and Part B. That's from the government. Part A is hospitalization. Part B is outpatient. But then the Medicare supplements that you can buy, those are called plans. And they're plan A, B, C, D, on up to like N, I think is the last plan. So you pick a Medicare supplement plan when you sign up for Medicare. Once you have picked that plan, every plan has different coverage limits and everything. Once you pick that plan, going forward, we mentioned open enrollment earlier. It's not open enrollment for Medicare supplements. Once you pick a plan, you will not be able to change to a higher level plan, one that covers more down the road without being medically underwritten. Most of the time, if you took an inexpensive plan, it's because you never go to the doctor. And then later on, you start going to the doctor because something's going wrong. Well, you're not going to get medically underwritten to get a higher level plan at that point.
That's the fundamental decision maker when you pick your supplement plan.
Right.
If you choose just on right now you're healthy, you can't improve your plan.
Right.
So let me ask this, probably a dumb question. What's the top plan? Is it N? Or is there a certain letter that's a top plan, or is there a few that are top plans?
So several years ago it was F, but they did away with that one. You can't get that one now. If you were on it before, then you can stay on it.
Yeah.
But you can't buy it new. Then there's G.
Yeah.
G is in Gregory, and I believe that one is still active. The next one after that is N.
Okay.
Those are kind of the highest level plans.
And so if you go in high end, you can always dial it down.
Right.
When you dial it down, you lose coverages, or what happens?
Right. Well, you lose coverages is a good way to put it. So it could be things like the deductibles that it picks up. It picks up less of it. You might have different expenses that would have been covered on your old plan that are not covered on the new plan. Part A and B, the government part, there are pretty significant gaps in those things.
And that's why you need a supplement.
That's why you need the supplement. And so any of those pieces that you need a supplement for, when you go down, you're losing some level of coverage on that. So you'll pay less in premium, but you're going to end up paying more out of pocket if you need those things.
All right, so the fundamental thing is when you're 65 and you make your first election, that's as good as it's going to get. Is that fair to say?
That's the best way to think of it, yes.
Let's say that instead of using the alphabet Medicare, I'm sorry, I'm not sure how to call it, ABC through N.
Oh, the plans, okay.
The plans, sorry. If you choose Advantage, are you allowed to upgrade out of the Advantage later on, or where are you at?
Well, Medicare Advantage is called Medicare Part C.
Okay.
We've heard A, B, C. And that's where you're buying into usually an HMO or a PPO. It's some sort of limited network that you're buying into. And it has to be available where you live. And I'll just say one of the issues that has come up in where we are, a company will come in and say, okay, we're going to offer this plan. And people say, oh, that's a great plan and it's cheap, and they'll sign up for it. And then a year or two later, the company's like, well, that's not profitable. And they pull out. And then those people that were on that plan have to go looking for another plan. Yeah. So Medicare Advantage, you can change from Advantage to Advantage plan. And if something happens where you need to change back to traditional Medicare, you can do that as well.
Can you bounce up?
Well,
the alphabet? Or I'm not sure how to say.
I'm not going to say for sure, because I'm not for sure on whether or not, let's say you took a Medicare supplement that was really low.
Yeah.
Then you went to Medicare Advantage and didn't like it. And then you go back to regular Medicare and said, oh, now I'm going to take a higher level.
Yeah.
That doesn't seem like that's going to be allowed.
Yeah, the point I'm trying to make is that your decisions, that if you don't think it through at 65, it could hurt at 75.
75, 80.
And so what we do at Akers Financial Group is we have you speak with Jeff Akers about Medicare and your situation. And we do this pre-65. Hopefully when you turn 64, trying to proactively get it ready. Then we bring in Medicare experts, people who sell the Medicare plans.
Right. They specialize in the supplements. They specialize in the Part D, the prescription plans.
Right. And then we bring in experts like that, and that helps.
Oh, yes.
Now, throughout Maryland, there's Department of Aging. They also have the help through the counties and cities, have people that can help go through your options. It is a pre-65 decision.
Right. Yeah, you need to know ahead of time what you're going to do.
You might get it in the mail. You might say, I can put it off. Most things in life, try not to put things off. But in the case when it comes to Medicare, please don't put it off. You need to make a decision that helps you in your situation.
Right. And you can sign up for Medicare 3 months before your 65th birthday.
So you're not covered to your 65.
Right. That's true.
But you can sign up, right?
Right. But your birthday could be at the end of the month, but your coverage is on the first of the month that you turn 65.
Let's say that you just know you're always late. You're always the one who signs up after the deadline. What's the deadline on signing up for Medicare before it starts costing money?
Well, there's actually 7 months that you have to sign up before you start getting penalized. So the month of, 3 months before that, and 3 months after that, you won't be penalized. Now, if you wait until 3 months after, well, you didn't have coverage for 3 months or 4 months, depending on what plan you were on.
But also, that increase, that whatever the penalty is for life.
Oh, yeah. If you don't sign up for Part B or Part D, the prescription plan, and when you're eligible to, and then you didn't have a job where you had coverage, and then later on you go to sign up, there's a penalty calculated, and that penalty is slapped on there for the rest of your life. It never goes down.
Yeah, so when you get a lot of things in the mail, it's not like shopping and getting the low price, because the low price usually means less coverage, right?
Right. Right. Now, I will say that with Part D, that's the prescription plan, open enrollment time is open enrollment for Part D. So if your prescriptions change over the year, when you get to this time of the year, you can shop and find a different Part D plan.
Oh, so you can upgrade that.
That's one thing that you can upgrade.
Oh, that's good.
Yeah, so that's for prescriptions only, though.
Yeah, it's what happens in life. There's these ages where all of a sudden we got to rethink planning.
Right.
65, now the new ages of 73 and 75 for IRA withdrawals. There's just certain ages that tie into all this. And so it's very important for us to get these points across so that the listener actually knows, hey, yeah, that's me they're talking about. Right. I really should do that.
Right. And so many times we've heard a certain age for a long time, and then the laws change. And by the time you get there, you're like, oh, it's different now.
So post-election answer on Medicare is nothing's changed, but these are the rules. But it's Medicare season. That's why you need to know it. The reason we want you to know this is because retirement should be a relaxing time. It should be the time where you get your time back, where you don't work it like you used to, where you get to pick your own time, your own thing to do. It's very relaxing when you have everything covered properly. You made all these big decisions and you're ready to go into your retirement years. So we help you do this by having a free consultation with one of our team of advisors. And you can actually get this free consultation by going to our website at akersfinancialgroup.com, AKERS or call us at 833-WIN-RETIRE. That's 833-WIN-RETIRE. We'll call you on Monday to schedule a free in-person meeting. Depending upon where you live, Medicare Advantage may or may not be an advantage to you. We'll explain more in a moment.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. This is the Akers Financial Group radio podcast, Winning in Retirement. I'm Brian Akers, and here with me today is Jeff Akers. We're both certified financial planner practitioners from Akers Financial Group, and we've been doing that for a long time together, Jeff. I think 24 years at the moment for us working together.
It has been 24 years.
And I got a decade plus on you with experience. Not that I'm a decade older.
But he is older.
A little bit older. So I know it's fun doing radio shows with your cousin. It's fun doing financial planning because it's a passion to help people,
Right.
and to help people through the good days and the bad days.
Right. And I enjoy getting to know people, understand their situation, and then help them navigate through life financially.
Yeah. So this week for me has been the election, and we're also talking about Medicare season. It's also been a tough week with having some clients pass away. They've been clients for 30-some years for me.
Wow.
I had a couple of them pass away. That's been hard just because it's the changing of your business when someone you met once or twice a year for 30 years passes away. Yeah. So when I mentioned the idea that someone during the good days or the bad days, that does affect our planning. Mm-hmm. And it does affect our now planning. Like my passion this week after watching what my clients went through is get your power of attorneys done. Like we have clients that every time we meet with them, get your power of attorney updated, get us update it. And like I had another one come in after this one client passed away, and I said, well, you never did get this done. We talked about it.
Right.
Please get it done. I mean, I can't do it for them.
Right. We're not attorneys.
No, but we can get attorneys involved. But the idea is this: in planning, if you do your fundamentals, you get everything done, then you can go enjoy retirement years. Winning in retirement is where you take away any of the stressors.
Right.
Stressors to me are the worst case scenarios, things that can throw off the plan. Mm-hmm. So when we see election and Medicare season, and we're talking about those topics, we talk about the election and possible changes based on what's going on. We just got to work within the plan of that. We're not seeing, we don't believe there's things coming that are going to effectively change retirement, but we do believe that we're going to have to change advice and Roth conversion times, things like that, based on whatever the laws are to the future.
Right. There are things that are going to need to be modified. Now, Brian talked about taking away stressors, and one of the things I'd like you to think about is taking away the stressors on your family. Mm-hmm. If you don't have the power of attorney and something happens to you and you can't take care of things, that's a huge stress on your family trying to take care of that for you. If you pass away and you didn't have a will, or the will wasn't what it should have been, then that's a huge stressor on the family. So getting these things right, it doesn't just protect you, it protects your family. So I think that's important to do.
You got to go through certain scenarios in planning, scenarios where you have a husband and wife, or the spouses are there and they're there together through all the years. Then there's the concept of one dies, then first, and the other one lives a long time. And you flip-flop it and just see financially, what does it look like?
Right.
And so that is good planning, and that's something you need to do. Planning, it's not the most fun thing to do, except that you get to do it with us.
Right.
Our team of advisors, we have excellent people, and we try to walk you through what you need to do. Now, this show has been called Election and Medicare Season. We started out with Mark Diorio talking about the stock market. Then Jeff and I talked about tax law, official changes this week, and then we talked about the sunsetting of the Tax Cut and Job Act and the possibility of that being extended. We're going to cover a little bit more of all of this, but on the Medicare season section, I want to cover Medicare Advantage. And the question would be, Jeff, is this may or may not be an advantage to you, the Medicare Advantage. Now, what's the advantage of Medicare Advantage?
The primary advantage is it's usually cheaper.
Cheaper, like zero.
Expensive.
Like, could it be zero? It can be zero.
It can be zero, and sometimes they do these promotions where it's almost like they're paying you to take their plan.
You get a free toaster?
I don't know about a toaster.
Okay. But so when you see a lot of things on TV or even in the mail, a lot of that's Medicare Advantage.
Right.
And like you said earlier, Medicare Advantage is tied to a smaller network of doctors.
Right. It's usually an HMO. It might be a PPO, but there's going to be a network. So
can you do basics of HMO and PPO, what that means nowadays?
Yeah. So an HMO is where there's a network and you have to go to doctors in that network, doctors, hospital specialists, everything in that network.
Sure.
If you go outside the network, then you don't have coverage.
So an example in Maryland.
Right.
Where you live matters, right?
Oh, yes, because the network is going to be geographic most of the time. There are some national HMOs that have a broader network. Sure. But most of the time when we think about HMOs, it's going to be in a certain area where you live. So if you're retired and you're never traveling anywhere, then okay, having an HMO, you're never going to go outside that area. That can be okay. But sometimes something comes up physically and you want to see the best doctor that does X, Y, or Z, and they might not be in your network. And so that could be a disadvantage then.
So if that's a Medicare Advantage, you can't go out of network, or is it a lot more expensive?
So if you've got an HMO version, there is a PPO version, which is a preferred provider network.
Okay.
There's a network that you stay in that network and it's the cheapest, but you can go outside and you have coverage. It's just more expensive when you go outside the network.
All right, I'm going to hit you with more questions. Let's say you have multiple houses, Maryland, Florida, and you want to retire. You're going to pop between the different states for a few months each during the year based on weather. Is Medicare Advantage really the right plan for someone that does that?
Well, I'm not going to give recommendations over there.
Come on, Jeffrey.
I
need answers, man.
I will say that if you have traditional Medicare with supplements, then basically any Medicare provider in the country you can go to.
Okay.
So if you're going from state to state to state, there's going to be a doctor somewhere nearby that you can go to.
So planning is unique, and also this Medicare decision is unique. Now, I want to head back to the word Medicare season and open enrollment.
Okay.
That's for people who already have Medicare. Mm-hmm. They have a period of time where they can look at what they have. Most of the time, they're addressing the prescription side. Is that correct?
Well, the prescription side, and it can be the Medicare Advantage side. We haven't had to deal with Medicare Advantage much where we are because there just haven't been really good plans in this area, so we don't encounter it. Mm-hmm. But Part D, the prescriptions, there's actually a tool that we can go to online. We put in the prescriptions you take, we put in the pharmacy you want to go to, and it will calculate which plan is the least expensive overall, premium, deductible, copays, and everything for you for the next year. And then we can move to that plan if it's different than what you already have.
So that's why if you're dealing with someone about Medicare decisions, you need to have your prescription list with you.
Right. Yeah, have your prescription, what it is, how much you take. Sometimes you have to say why you're taking it.
Now, we're covering this because those listening might not be anywhere near Medicare, but they might have a family member.
Right.
And that family member calls them, and then they're like, oh, yeah, I don't know anything about that. But then you might say, hey, I was listening to that Winning in Retirement. They covered that, didn't they?
Yeah.
And then what you say is go to AkersFinancialGroup.com. You go to our radio podcast tab, and the show will be right there.
And
they
you
can
pick up the
listen.
phone and you give us a call.
Or you can call us. That'd be a lot easier than listening to the show and then call.
Right.
But you can get some information by checking out their radio podcast through our website or any podcast site out there, which is pretty cool.
Right. Just give us a call. We can sit down with you and work our way through the process.
Winning in retirement is when you don't have to worry about any of this. You've made all your decisions. You got it done. But the open enrollment season, the Medicare season, is a time where you have to readdress, especially if you have any new prescriptions and you've been all of a sudden paying a lot more money for something. You need to see if there's a better way.
Right. Yeah. Sometimes there is a much better way. Years ago, I helped someone. They were paying, $20, $30 a month in premium. And we went through their medications. We entered it in, and they got something with like a $7 a month premium, and their medications were still almost nothing. So it was a lot better deal.
Yeah, nice.
Yeah.
You saved them $23
per month, man.
I can get a whole hamburger in that nowadays.
Adds up.
All right. So we only have a couple minutes left. The show's been called Election and Medicare Season. Okay. Now, Jeff, we had Mark Diorio first.
Yes, we did.
What do you remember about Mark Diorio's talk that we had?
Oh, my gosh, that was so long ago and so many Medicare questions ago.
I know.
But
was Mark a good market, a thumbs up market, or thumbs down market?
In the short term, he's a thumbs up market.
Yeah.
Because he likes to go through the presidential cycle, the election cycle, and the first year of a president's term is usually a positive stock market year. But then he did mention that it could get a little overheated. And then the second year is where you could have a correction.
Yeah, corrections are a 10% move.
Right.
10% moves on a $50,000 Dow is 5,000 points.
Right. So don't pay attention to the huge numbers that you see. Look at that percentage. That's the important part.
Absolutely, as the things are different numbers.
Right.
The interest rates, we talked about that with Mark.
Yes, he did talk about interest rates and the potential to continue dropping them, but they'll keep an eye on things.
Right, and that's run by the Federal Reserve, not whoever's president, right?
That's right. Yeah, the Federal Reserve sets what they call the Fed rate. Surprise, surprise.
Now, the newest president was also the person that brought in the current Fed Reserve chairman.
Right. So President Trump nominated Jerome Powell I believe Mark said in 2018.
Yeah, so these are all parts of what's going to be going on to the future. So when you think about, what's going to change, the idea is this. The Federal Reserve is going to be pretty stable for, I think, 2 years. And so that's going to be who's in charge. We sort of can see what they're trying to do. And then we'll see the other rules and laws that might be proposed and seeing how they get through.
Right, because there's two parts of it. There's the Fed policy, but then there's also the fiscal policy, what Congress passes.
Yeah, this show's flown by. This election and Medicare season is upon us. Election is mostly done. I like the word mostly because they're still counting. But this show is also mostly done, Jeff. I just got to do the big finish. Thank you, Jeff, for staying awake the whole show.
My pleasure.
I appreciate that. And we thank you for listening to our Medicare and election season show. All right, so we look forward to meeting with you. We want you to win in your retirement by taking advantage of the opportunity to begin planning with us at Akers Financial Group. To schedule a free meeting with one of our team of advisors, go to our website at akersfinancialgroup.com. Scroll to the schedule a meeting section and let us know you'd like to schedule your free meeting. That's akersfinancialgroup.com or call us at 833-WIN-RETIRE. That's 833-WINRETIRE. We'll give you a call on Monday to schedule your free in-person meeting with one of our team of advisors. Start planning for your retirement now. Go to akersfinancialgroup.com or call us at 833-946-7384. Thank you for listening. I'm Brian Akers from Akers Financial Group, and we want you to be winning in retirement.
You've been listening to Winning in Retirement with your host, Brian Akers of Akers Financial Group. Akers Financial Group offers securities through Archedios Capital, an SIPC and FINRA member firm. Advisory services are provided through Archedios Wealth. Akers Financial Group and Archedios do not share any common ownership. Neither Archedios nor Akers Financial Group provides tax or legal advice. Advice given on winning in retirement is general in nature, and one should seek further advice from their financial advisor, broker, attorney, and or tax accountant before investing. Be sure to read each prospectus carefully to understand all the risks associated with each investment. Examples and scenarios shared are meant to be for illustrative purposes only. Past performance is not indicative of future results.